Ben Pedley, Chinese stocks, if you look at the FXI, which is the ETF which tracks them, are not off to a strong start in 2014. After a relatively poor 2013, we keep hearing stories about Chinese growth slowing. How strong is corporate China?
We think corporate earnings are going to pick up in the second half of this year. The key is that policymakers in Beijing have got wiggle room to stimulate the economy, both on the fiscal and monetary side. And indeed, we believe that probably growth has slowed to its nadir for 2014. So we actually see growth picking up through the end of this year. So from that perspective, we're looking around the world for value, and we see value in China versus some of the more expensive emerging markets.
Well, speaking of the emerging markets, the Fed didn't help Chinese stocks last year. Well, that taper talk really hurt emerging market stocks. How should U.S. investors approach Chinese stocks as well as the rest of the emerging markets?
Well, I think when it comes to approaching China stocks, probably the easiest way is to look at China-related stocks listed either in the US, I suppose, or in Hong Kong, where the markets are more freely traded. But I think that the whole tapering exercise, I mean, that is very much in the price. And don't forget, it's not just about the Fed. We at HSBC believe we could see further easing from the ECB and also the Bank of Japan. So that's a nice counterbalance for what's happening with Janet Yellen and co.
So what are your favorite sectors when it comes to China? A lot of people watching the internet in China recently, but those stocks have really sold off, your Youku and your Sina and your Baidu. And people keep talking about the consumer sector over there because they talk about the rising consumer. What do you like?
We like New China, so we like some of these technology names. We think there's some opportunities there because, of course, the market is less developed than here in the West, and particularly, in the US. We like Asian healthcare names in China, but also elsewhere around the region. Japan, for example, has got an aging population, but Asia, and of course China more broadly, has a growing population, and we see opportunities there in the pharmaceutical space as well. Food distribution. The world's population is getting bigger. We need to get the food basically from what we say in Asia. We want to get it from the paddock, another word of saying the field, to the plate. And we want to look at companies that get it from A to B. And we see opportunities there as well.
And then finally, what about the worst case scenario? You keep hearing figures like Jim Chanos talking about a real estate bust over there. And you keep seeing the numbers slow down. How worried are you? What kind of a percentage would you place on a real Chinese bust?
Well, we think Chinese growth is going to pick up, as I said, through the end of this year and possibly into next year. But the key to remember, if you're talking about the housing market in China, it's far different from here in the US. Only 20% of households in China have a mortgage. The rest own their homes outright. So that's why you can't say that there's a bust coming like we saw in the US and compare it directly to what's happening on mainland China.
Ben Pedley, thanks for coming on.
Thanks very much.
And thank you for watching The Street.